Looks like the Greek debt swap deal cleared 95%, right? And this is something I picked up from yesterday, though. You know, between 66 and 90% of the bondholders accept. That's a forced deal. Athens steps in and imposes the deal on others. That's exactly what happened in reality right here. Um, but you know, it says the collection active clause is being inserted. The collective action clauses allow the government to foist the deal on all bondholders if 66% of those who vote approve the deal. That's exactly what happened. This was exercised, the collection active clause. So you're watching this headline here, you know. That was involuntary. That was involuntary. That's interesting too. Um, it says so the deal will get done, but this time the coercive element can't be ignored. Rating agencies have said they will declare Greece to be in default. Now, actually, they kind of have them as like a technical default. They've already been rating them that. You know, and I've been noticing as time's been going on, it's been taking longer and longer. It's like something breaking down. You know, if you're a mechanic or something, you hear like noise in the engine, right? It's breaking down, breaking down, breaking down. Well, it's kind of breaking down. When it finally does go, you can hear it more. And I think that's what's going on with this Greek situation. At first, it was a bunch of drama back and forth. You know, but I'm not waiting for the sky to fall. But I'm thinking right now, this is going to cause the markets to take a nosedive. And they'll probably do it on a weekend or overnight. Just like, you know, we were kind of feeling pretty good about, you know, the markets going up, going up, going up. And, you know, Bernanke said no QE. That probably was a clear signal to sell off everything at that time. That would have been a smart thing on my part, but I didn't do that. Actually, I sold when right at a Fibonacci point when it bounced. When it bounced, actually, should have waited, let it bounce. But you never know. It could go right through that point too. You never know. I think overall, this stuff is going to go down some more. Now, what's actually, well, the metals are going up and down. What else is new, right? The only thing I actually felt good about, though, was the oil. You know, that was that. I'm staying in with that double leverage position. I don't know what it's going to do, but I think Israel is getting all freaked out about. I don't want to knock them or nothing like they should be freaked out about, even though they got a pile of nukes and stuff. That Iran is going to get the nuclear weapon, and if they don't act now, or pretty soon, it's going to be too late. They're never going to be able to knock them out. So, you know, it's either to be Israel alone or the U.S. and Israel. And, you know, I don't have hardly any faith at all in these web bot predictions, but that is a web bot prediction, kind of a curiosity if you want to put that on a you know, as a note, that Israel will go alone, make a mistake on something. But I think that I feel better about the oil than the silver right now. Now, I feel super fine with silver, physical silver, gold, platinum, palladium. I think all that stuff's fine. And, you know, here's another thing. Kramer, no Greek default. This was back on January 30th, 2012. I don't know. I mean, sometimes the guy's right, but usually when he says something, it's the other way around. I know that's the big joke, but it didn't happen today, but I think in a way it did happen. I think when they're talking, you know, I don't know what the hell they're talking about, you know, because this crap is like confusing, and I don't want to make this into a bunch of BS drama, but this was a fact. They said a forced deal. You know, they didn't have the 90%, and I think they had to pay some people like money. I think there was some hardcore people in there that were really forcing them to pay up everything that was owed. They weren't taking no haircuts or anything like that. And they had to do this. They had to do the forced deal. They didn't have the 90%. They forced them. They used this corrective action clause. It's stating right in here, and I don't know if this is BS or not. Rating agencies have said they will declare Greece to be in default. So maybe you'll see some garbage come out maybe next week or the week after that Greece is actually in default. I don't know. I think this is coming up, though. I think things are breaking down fast enough. You know, on his silver chart, you know, the wackiest metal in the world except for palladium, you know, I still think, I don't know. Yeah, I know. Sometimes you get too technical with this stuff. What the hell good is it? But the fib point actually, if you're looking from the low back in 2008 to the high in 2011, would be about 24, roughly. So, but this, when you're looking overall, I don't like, I hate technicals in a lot of ways because I know what people talk about. They're kind of like, you can argue this crap 50 million ways. It's almost like statistics. But I'm looking at this Greek situation, and I know it's been talked about for damn years, a lot of years. It's been talked about since 2008. It's been in the news all this time. All this correction period was going on. But I think there is going to be this problem, and it's going to drop down silver one more time. And Mark Farber is actually giving me more confidence in saying this stuff, but I'm feeling it. But I'm feeling it like, God, it doesn't seem that way to me. I'm thinking it's going to hold support here. That's probably what it's doing right now. But we can see this news come about at night or over the weekend, which is usually the case. Weekend plunge. Every time. What happens? What happens to the markets? What happened here? This is on a weekend. What happened here? This is on a Friday, right? Even here, what happened with this? It was like Bernanke opened up his mouth. We could actually pull the trigger on this, but then this one was there was another one. It was overnight. A lot of times it's overnight or over the weekend. So maybe this, rumor about March 23rd is legit, but maybe it won't be March 23rd. Maybe it'll be sometime in April. But I think it is good to stay the hell out of these electronic markets and the precious metals for now. Wait till there's a hard pullback, or till Bernanke says we are doing QE unexpectedly. Like when they don't think he's going to say it. And then jump in there. If he says QE, jump in there. That's what I'm thinking. I'm staying the hell out of this junk for now. This is the oil chart, right? I'm still in double leveraged oil, and I feel pretty good about this. Like I said, I think Israel might do something, and that's where you're going to see this thing fly up. But in any case, even if it pulls back some, I think it's going to fly up. This Middle East tension stuff is not going away. So I feel better about the oil than I do the silver for now. Now silver, as far as you get, what do you call it? Let's get back in here. This is the gold chart now. I was saying something. I know these fib points and stuff, but a lot of times I do kind of believe in this Fibonacci because being a mathematician before I was an accountant, there was this thing is got so many freaky ways it works in nature. Now, if you're actually trying to predict, price movements of things on smaller levels and too many different levels, I don't know, fib kind of doesn't work every time because it's, it's like even if you take a seashell, if you examine that seashell too closely or a conch shell too closely, you're not going to be able to dig out fib points in every little place on, how close you get in. But you look at the shell overall, yeah, there's Fibonacci going on in there, It's all going on in the universe. But, so the fib point actually from the high to the low would have been 1466, right at this point. And what this would actually form is a bull flag, which is, another one of those technical things. But I don't want to get into and say and argue for this because of only the technical reason. But I think there's going to be this final pullback with this Greek crisis. And, that would be the bull flag. Here's a flag. It would be down at 1466 or below 1500. Actually we have in lower lows, lower highs over the longer period of time. There's going to be something with this Greek crisis. You're probably going to slam the crap out of all the investors overnight or on a weekend. What else is new? What else is new? And, when you really start thinking about it, what made this rise? It becomes a lot more clear on gold because silver is all over the place, right? What made this rise? Quantitative easing. Quantitative easing was responsible for this rise. not only was gold going up, but everything that was important was going up that people consume. You know, it could be energy, corn, wheat, cotton, coffee, all that stuff was going up. Copper, palladium, platinum, blah, 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 right? All this stuff was going up. And that was because of quantitative easing. They were expecting quantitative easing all along this time when this stuff was going up, because they figured all this talk from all this time back in the last quarter of 2011 was talk about quantitative easing happening sometime in 2012, probably early on, because elections are coming up. When he opened up his mouth, no QE, wham. And this thing with the Greek debt, now you're starting to see rating agencies start downgrading things piece at a time, piece at a time. That's really why I'm saying, not technically exactly, I'm saying it's going to fall because of the Greek debt situation or the Euro debt situation. It's very difficult to see it on each day, but I think we don't have. It might be in April. It might be in April, but we're going to see this thing drop like crazy. I feel okay in the oil, but I'm not touching electronic markets on any of the metals. And maybe I'm a little bit into copper, because if they have a war that breaks out, I don't know. They use lots of copper in wars, so I'll stick with that. But that's pretty much a small position. And but once the real financial crisis occurs, like in 2008, again, we're going to see this take off. And then I guess you could say the pattern's going to be from here to here, and add that to the next jump up. And gold is going to be like $3,000 an ounce or more. So, you know, ultimately, probably take a couple years or something, but that's probably what's going to happen.